Hi there, Greg Lewis, MetaStock Software. Hey, you're about to watch a recording of the April 2017 Online Trader Summit presented by MetaStock. This quarterly event, put together by our own Jeff Gibby, highlights some of the industry's best traders, and I know you're really going to enjoy it. Hey, if you haven't tried MetaStock yet and would like to have an extended 3-for-1 trial, visit metastock.com/traders-summit 3-for-1, or just click one of the things provided and get your free trial. Thank you, and I hope you enjoy the presentation.
Good morning. I want to welcome you to, we have a great lineup of people. Some people I really respect in the industry today: Steve Bigalow, Price Headley, Oscar Carboni, Todd Gordon, Hubert Center, Steve Primo, Chuck Hughes, Barry Burns, of course me a little bit later. I want to welcome you. I want to thank you for coming out today. It's such a great event. I love these things. And it's an awesome lineup. We're going to be having a lot of fun today. So welcome. Thanks for coming. Let's get through the legal disclaimer real quick right here. So as you know, today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading, and MetaStock should have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So there you go. I do want to say real quickly, today's event is sponsored by Stocks and Commodities Magazine. They've been sponsoring us since Online Trading Summit #1. It's a great magazine. I get it. I read it every month, and I've been doing that for over 20 years now. And for registering today, you're going to get a free copy of it. And if you're not a subscriber, you should be. So in any case, there's a picture of the magazine. And I want to talk about our presenter this morning, a guy by the name of Steve Bigalow. I consider him a friend of mine. In addition, like a lot of the methods that I've learned just from working with him over the last several years, I actually implemented into my own trading. And not only that, since I always talk about like the stuff that he's doing and the stuff that he's working on and that kind of stuff, a lot of our users really like his stuff and like the implementation we've done with the software as well. So let's go ahead and bring Mr. Steve on. I'm going to go ahead and unmute your microphone, Steve. Can you hear me?
Yep, Jeff, can you hear me?
You're coming in like an angel, man.
Okay. Good morning, everybody.
So I just turned the controls over to you, and I'll let you know as soon as I can see your screen. And I can see your screen.
All right.
All right. So I'm going to get out of the way. I'm going to let you go, and we'll see you in a few minutes.
Okay, great. Thank you, Jeff. Good morning, everybody, and thank you for showing up on a Saturday. The first question I usually ask before I start is how many people have seen my Candlestick presentations in the past? That kind of gives me a feel for how much description I have to do on each one. So it looks like most everybody. Okay, seen some. All right. Okay. I have two major points to make. The information that you're seeing that has turned my investing around 180 degrees over the last, I hate to think how many years now. It was based upon me being probably one of the worst investors in the world. I was even a stockbroker for 8 years. And I got out of the business because I realized the brokerage firms back then had no more idea about what made stocks go up or down than the man on the moon. And so secondly, what I want to point out is Jeff's got a whole array of very good investors coming up today. And we're usually put candlesticks first because it's kind of the bricks and mortar of anybody doing any analysis of no matter who you're using or what trading technique you use, if you lay candlesticks over the top of it, Jeff, I think your mic is still on. If you lay candlesticks over the top of it, it improves your analysis that much greater. So I use candlesticks as my #1 criteria, and then apply any other information that I need to. If anybody asks what the T line is, okay, Gwen, I'll make sure I I'll make sure I know, let everybody know what the T line is. So we're going to work on trend analysis and kind of concentrating on trend channels. In the past, I've seen.
Steve, I have a few people that are saying that they can't see your screen. So,
yeah, I wonder why that is.
I'm going to actually kind of take the presentation back for a second and just kind of push it through again.
Okay.
So now you guys should be able to see a picture of Steve Bigalow.
Okay.
And then I'm going to stop actually showing my screen, and then I'm going to change it to you, Steve. We're just going to kind of try and force it through in case some people didn't see it.
Okay.
Okay, now I can see Steve's screen again. By quick show of hands, just a quick yes or no, can you see Steve's screen? It should say trend analysis, trend channel for profits.
Ugly Steve, who said that?
It wasn't
good.
Okay, most people can see. What I would recommend for those of you that can't see it is maybe just log into the room. We have plenty of space right now, so that should be fine, but it looks like the majority of people can see it.
Okay.
So maybe it's just kind of you're stuck in the app or something, and maybe just reboot and re-get into the room. So
okay.
Sorry about that interruption.
Yep. Okay, no problem. So we're going to go kind of to the next step. Remember, there's the candlestick signals. There's about 50 or 60 candlestick signals, which we've narrowed down through the years of, there's 12 major signals. And then there's price patterns that are very high probability setups. And again, the reason that there's high probability setups with both signals and patterns is that investor sentiment works the same way time after time. We wouldn't be looking at trends or price movements, but it was also pretty much confirmed by people like the Elliott wave theory that prices move in waves. So trend analysis, why is trend analysis important? Because you can use the candlestick signals and patterns to easily identify which way the market is going. Now I use the representation of the market being the Dow, the NASDAQ, and the S&P 500. A lot of people ask, well, why do you use the Dow? There's only 30 stocks there. Because the Dow is pretty much representative of what's going on in investor sentiment. So we can use market analysis, that we can use the candlestick signals and it's very simple confirming indicators to tell us when there's a top. Now I use stochastics. My stochastics are set at 1233. So very simple logic. The old lady joke, all right. There's very simple logic in candlestick analysis. The Japanese rice traders told us if you see a candlestick sell signal in the overbought condition, the probabilities are you're heading back down. If you see a candlestick buy signal in the oversold condition, this is a big morning star signal, the probabilities that you're probably heading up. Now on my charts, you're going to see that they're very simple. We've got the 200-day, 20 or 50-day, and 20-day simple moving averages. The reason we have those on our charts is that because every money manager around the world uses those moving averages to make their decisions. And also, I'll make sure it's clear, we use what we call the T line. This is the black line. It's called the 8 exponential moving average. I'll get back to that here in a second. But you can see very clearly that you see a candlestick buy signal, and a lot of times we can use what we consider what I call convergence analysis. And that's putting as many indicators as possible in your visual analysis as possible. For example, there's a doji in the oversold area. The doji obviously is a little indecisive trading day where it opens and closes at the same level, telling you there's indecision between the bulls and the bears. This is a Morningstar signal, a big dark candle. The next day after the doji, a big bullish candle that closes more than halfway up that candle. That's a Morningstar signal. When you add the factor that it happened in the oversold area, number one, that it bounced exactly right off the 200-day moving average, number two, and it closed above the T-line, number three. We'll get to the T-line again in a minute, but there's a very simple rule of the T-line. If you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close back below the T-line. So when we're looking at trends, it's obvious. You can see whether there's a trend channel to the upside, a trend channel to the downside, or whether you're moving sideways. Now, that doesn't take very much visual skill to have to do that, but candlestick signals pretty much tell you whether the sideways trend is going to continue, whether the downtrend is going to continue, and we know that prices move in waves. We always can count wave one, wave two, wave three. Now, a lot of people ask, well, is that an Elliott wave count? My answer is no. I'm probably not going to be in a trade long enough. I'm a swing trader. That means my trades are anywhere from 2 to 10 trading days. I want to know what's going to happen on the breakout of the next wave so I can take advantage of this trade. So the T-line. If you don't get anything out of this presentation, take this home with you, the T-line. The T-line is the 8 exponential moving average. And this is the most important concept of candlestick analysis, that if the candlestick signals are the graphic depiction of human nature, showing you when there's been a reversal and what's going on in human nature or investor sentiment, and the T-line, which is the 8 exponential moving average, there's a very simple rule. If you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close below the T-line. So what is the T-line? Well, we know that the other moving averages like the 200, the 50, and the 20 is on everybody's charts. They look to see if prices are going to move back to those levels and see whether it's acting as support, and that's when they're buying. The T-line, nobody has that on their charts. So it doesn't act like a magnet because nobody has it on their charts. So what does that tell you? Well, it works so effectively that something has to be happening here, which is it acts like a natural Fibonacci number, that it's a natural number of showing where there's investor sentiment is acting as support. So if you take the T-line, which is kind of a natural support and resistance level of human nature, and you add the candlestick signals, which is the graphic depiction of human nature, you combine those two, you've got a very powerful combination of when to get into trades and when to get out of trades. ND, if this is, and another factor is, this chart could be a daily chart, a weekly chart, or a monthly chart. Or it could be a 1-minute chart, a 10-minute chart, or a hourly chart. The simple definition of candlestick signals are that they are the graphic depiction of everything that's going on between the bulls and the bears at any time frame. So it doesn't matter. No, the T-line is the 8 exponential moving average. Jeff, somebody might have to help Robert get on the right screen. So if it's the T-line is the 8 exponential moving average. So if you combine those two, you've got an extremely powerful combination. The pink line, there's a wee little green line here. That's the 3T. That's a whole different. That's the 3T line works effectively. That if you start moving too far away from the T line, the 3T line gives you a much faster sound. So what we're going to do is look at channels. Because channels are developed by utilizing parallel line, it becomes relatively easy to extract where a trend channel will be making its next target, which is allowing for being prepared for potential candlestick reversal signals. Now, before I go on further, Jeff and I have been working together for the last 2, 3, 4 years. All our signals and patterns have been formulated and are on MetaStock. And the reason we've worked so well together is I've only got one complaint about MetaStock, and that is there are so many good things that you can utilize on MetaStock, you can't use them all. So fortunately, there's enough good things where you kind of pick and choose what works best for you. So one of the factors is that we're looking for trend channel breakouts. And that's basically telling you what is happening in investor sentiment. So I always use this as an illustration where we've had an uptrending channel. Notice how every time it hit the bottom of the channel, we started seeing candlestick buy signals. So on this day, we have a Doji, and what do we know about the simple rule of the Doji? Simple rule of the Doji is that we're going to move in the direction of how they open it after a Doji. Well, if it closed right here, and the next day we woke up and the pre-market futures are showing that it's going to be down 140 points, that told us immediately that they've broken this channel. We want to be out of this position or out of positions. Same scenario on a trend channel in the NASDAQ, where the channel is the same, and the nice thing about a channel is if you are I saw a paused screen. What is the MetaStock? Okay. If you have a bearish engulfing signal, on the same day they gap it down where they're breaking the downtrend of the Dow. Oh boy, I don't know why why we can't get so many screens, Jeff. But we have a bearish engulfing signal with the gap down at the same day that the Dow is breaking the downtrend. That tells you there's been a definite change of investor sentiment. So trend channels are fairly easy to apply. If you see a situation where you can hit 2 points and you can start hitting on put a parallel line on, and that seems to be the bottom of the channel, that just tells us we want to start looking for candlestick buy signals at the bottom of this channel, because if we're in the oversold area and we see a buy signal and a close above the T line, where's our next likely target? Back up to the top of the channel. Now, I was a little bit remiss about the T line. The T line is that you can, if you see a buy signal and a close above the T line, you can stay long until you see a candlestick sell signal and a close below the T line. However, there's one caveat to that. The further away you move from the T line, the higher the probability it's going to come back and test it. I am muted by the organizer. So here's where you improve your probabilities. Yeah, Jeff.
We can hear you.
Okay. Looks like a few people are still having problems. So this is just kind of pure common sense logic. If you use those simple rules, that the further away we start moving from the T line and we start seeing sell signals and we see it's right at the same level, you're going to see a trend channel top. This is a very high probability place to start taking profits. And if we start seeing sell signals, where's our next target? Right down to the bottom of the trend channel. Now, will it always get there? No, that's just a target. What is our main criteria for buying and selling with candlestick analysis? Watch to see what the signals are telling us. Everything else is just a confirming indicator. So investor truisms of candlestick analysis is Again, the further away you move from the T line, the higher the probability it's going to come back and test it. So if we took drew our trend channel through the tops and did a parallel line from here, that tells us we want to start watching to see if there's buy signals in this area, which there was. If it closes above the T line, where's our next likely target? Well, we wait to see what it does at the 50, and if it goes through the 50, we're waiting to see what it does up here. And notice all the indications that we had telling us that it was probably time to take profits up here. That let's see if this extrapolates out. That we look how far away we moved from the T line. Then we saw a bearish harami, which tells us the buying has stopped. Opens lower the next day, confirming where do you think our first target's going to be? Back to test the T line. So we know to start taking profits up here. If it closes below the T line, where's our next target? Probably back down here to the bottom of the channel. And notice what we see down here. Here's that big morning star signal with the doji bouncing right off the T line. This just becomes very obvious to the candlestick investor that this is where there's been a reversal, right at the places that you would suspect a reversal to occur. So once we start buying here, where's our next likely target? We're going to see if it gets back up above the T line. Same scenario on here. I guess that we did that one. So once we see a trend channel developing, then we can extrapolate out where should we start looking for candlestick reversal signals. So if we had gone short somewhere up here, this becomes a high probability area to start covering your short position. Again, this is not rocket science. This is because investor sentiment works the same way time after time. So the trend channels are just another aspect where we can take advantage of where the indecision and the reversals are occurring at a place that we can already recognize based upon, in this case, a channel in progress. So at least if we're reversing our position here and going long, we know where our potential target is. Why do we want to know what our potential target is? Because there's going to be some charts where this move might be a 6% move. Well, I'm looking for moves that might be a 60% move. I want to go after the positions where that if I'm going to take the risk, I want the reward to be that much greater. So I'm looking for those support and resistance levels. Netflix, not too long ago, notice that it had kind of this channel, almost a wedge. And notice what this told us right here was they weren't going back to the bottom of the channel. So that gave us a whole new perspective. But if they're doing a bullish engulfing signal right here on the 50 and heading back up, that's probably telling us there's going to be more implied force right here at the top of the channel. We could be buying, and as soon as we see it break out, we know that we've got a breakout of a channel, which is usually going to improve our probabilities of being in a strong price move. NetT, same scenario. When we can see this channel wedge, we can see what's happening down here. We can see the dojis, bullish confirmation, and then a breakout, not only through this downward trend channel, but through the 50. That puts us in situations where the probabilities of not only being in the right direction at the right time, but being in a very strong price move is that much greater. So again, market analysis is nothing more than what do we do to signify which direction we want to have our portfolio. Another aspect of candlestick analysis is if you look at candlestick analysis and decipher the charts and the signals, all it is common sense investment psychology put into a graphic depiction. So if we see a candlestick sell signal in the oversold area, the probabilities are we're going this way. If we see a candlestick buy signal, this is what we call a morning star, and more definitively a McMuffin. There's our morning star signal. And this is what we call a doji sandwich, where you had a big up day, a doji type day. If it opens positive, what's our simple rule of the doji? It's going to move in the direction of how they open after a doji. So more than likely, this candle right here is going to be the same magnitude as this candle right here. Thus, your doji is sandwiched in between. So you have a doji sandwich. So when you combine this together, you got a morning star signal and a doji sandwich, or a morning sandwich. That's your McMuffin. And what's the implication of a McMuffin? You're going to have a good, strong uptrend. So candlestick analysis is nothing more than graphically seeing when there's a bearish engulfing signal and a close below the T line, you're heading down. An inverted hammer, bullish engulfing signal, you're heading back up. It puts you with visual analysis to tell you which way you want to be trading. If you've got a portfolio, we have some very simple money management techniques of trading portfolios where you're keeping your emotions out of your trading. But let's say we have 10 positions on. We might be reversing our short positions here and now have 6 or 8 long positions. And up here, we might have already started rolling over and moving toward the short positions. How do you put your stops in? Annie, the logic of candlestick analysis is just as simple that if we see a candlestick buy signal, the implication is we should be moving in this direction. So if I bought on this day, where would I not want to see this close? I wouldn't want to see it close back below the T line, and I definitely would not want to see a candlestick buy signal close back below the halfway point of the bullish candle that told us the bulls were now in control. So there's very simple logic to when you get in or out of a position. Now, through the years, people have asked, well, what's your percentage of correct trades? Unverified or unofficially, I would guess it's approximately 65 to 70%, which is a good ratio. I know in futures trading, if you can make 50% of your trades positive, you'll make a fortune. But the one thing that I learned through the years was back before candlesticks came along, because I was a much smarter person than everybody else out there in the world investing, that if I bought, it was because my superior analytical abilities said it was supposed to go up, and if it didn't go up, it was because everybody that wasn't as smart as I was didn't see the reason why it should be going up. I learned that everything that we're looking at on charts is a probability factor, that the probabilities are pretty strong that if you see a buy signal here, you should be heading up. So the other factor is if 70% of your trades are positive, you've got to kind of already have set in your mind that 30% of your trades aren't going to work. So part of successful investing is knowing that when you put on a position, it should be doing what you expect it to be doing. If it doesn't, you close out the position very quickly and move on to another position that has those probabilities in your favor. The patterns, morning star and evening star, how often do they form in the 2-minute or 1-minute charts? Eunice, candlestick signals occur every single day, everywhere. And that's the nice thing about MetaStock, is it's going to identify those signals for you. So again, this is not rocket science. Investor sentiment works the same way time after time, whether it's on a 1-minute chart, a 5-minute chart, a monthly chart, or a weekly chart. It's still going to be that simple definition that candlestick signals are the accumulative knowledge of everybody buying and selling during a specific time frame. Annie, if I'm using, yeah, it's all, if I'm trading this, and let's say this was a stock versus the market, that if I was buying down here and now I've gotten up in the overbought condition, what don't I want to see? I don't want to see a candlestick sell signal and a close below the T line, like right there. So each day I might be putting my stops. If this opened positive and traded positive, I move my stop up to that open. If this one opens positive and trades positive, I move my stop up there, because logic says if I'm in the overbought condition and this is trading positive but comes back down through the open, more than likely there's going to be some sort of candlestick reversal signal developing. Could you provide a little bit more information about the 3T? We are going to be doing a 2-day training, May 20th and May 21st, going through the T line and the 3T line, how effective they work, how you use their, how to use them effectively. Now, I use the T line because you've got all sorts of indicators out there that you can add to your chart at any given time, whether it's Fibonacci numbers, Bollinger Bands, anything that everybody else is using, you can utilize. The T-line, I used to make good money before the T-line was suggested to us by one of my private training students years ago. I was making good money before the T-line came along. Now utilizing the T-line, my returns are dramatically better. Do you go along when it close above the T-line, even when the signal is below? Yes, we're not trading the 50-day moving average. The most important criteria is what is the candlestick signal. That's telling us there's been a change of investor sentiment. Everything else is just a confirming indicator. Why call the T-line? Short for trigger line. It was we were trying to figure out a quick name for it because we were using it quite often. So it's our trigger line. If we see a buy signal to close above the trigger line, we want to be buying. If I've missed people's questions, it's just because I'm trying to get through this and then I'll take all the questions. So we can use trend analysis. Now, last summer, before the elections, we could see what was happening in the market. You couldn't trade this one way or the other, especially over here. Down, up, and moving sideways. You might as well have just gone fishing. Let's see, previous. The second short, in this example, the second shorting opportunity did not give a good risk reward. Remember, this is the market indexes. If this was starting to be our signal in the markets, now we're scanning for the stocks that have the strongest bearish signals. And where would we be covered? You start watching to see what they're doing when we start seeing bullishness coming back into the market. Money trader, I'll get to that at the end. A wife can have uptrends and downtrends. Look for the reversal. Okay. I can't look at, they say I can't look at live charts. I've got a few that we're in as we get to the end. Yes, you sure free to use anything. All right. This is the 8-period moving. Yeah, the T line is the 8 exponential moving average. So here are the obvious channels. And this has been happening in the Dow since the election. That when we see something like this, we know obviously it's consolidating. But then notice what happened at the election. There was a little inverted hammer, bullish confirmation, and then a breakout into this area. We were already established for this move. We can see it's time to take profits. What's the market going to do? We don't know whether it's going to break down or up. As soon as we see our little best friend, going ahead of myself. We can see the trend channels. What do we expect coming out of a trend channel? Either a move to the upside or a move to the downside. So when we have a trend channel, look at that, a gap up after our inverted hammer. Remember, we also do trainings on gaps. So let me take a quick commercial break here. On our website, we've got a chat room, and we train people how to identify what the strongest reversal signals are. Gaps are a part of that. Through the years, I've heard most money managers say, stay away from gaps. You don't know what they're doing when they gap the price around. Candlestick signals and gaps are your best and most powerful profit setups. Because if we know what the investor sentiment is here and they gap it up, we know exactly what's happening. We're ready for that next move. If we see a sideways channel, there's our little doji followed by a gap up, and they break out through this level, we know we're in the next price move. When does that price move end? Very simple using gaps. If we see a candlestick buy signal and a gap up above the T line, this is the basis of candlestick analysis. The Japanese race trader say, where do most people sell? They panic sell at the bottom. We're looking for that strong buy signal starting the next trend, and then reverse of that, where do most people sell or buy? They buy exuberantly at the top. If we see a gap up in the overbought condition, the first thing we start looking for is profit taking. Notice once again what happened here just in the last week or so. A Doji gap up through the resistance level. 2 gap ups. So we're sitting right here. What's the implication? If they're gapping up off of candlestick signals, the implication is we're in the next wave to the upside. That we've got a wave 1, wave 2, wave 3. Now, is this wave 4, 5, 6, 7, 8, 9? It doesn't matter. We're only trading this wave right now. Netflix traded sideways. Notice your best friend signal over the last few days. Doji gap up. And where did the gap up take you? Again, this is your best friend signal. This is one of the signals that Jeff and I have got in our MetaStocks scanning softwares, that it shows when these are happening. And so if we know the psychology behind a best friend signal, a day of indecision, and then they tell you what that decision is, we call it your best friend, not only because you're going to be in an uptrend, you're going to be in a very strong uptrend. So that tells us we want to be buying. Now, remember, we've gone through the logic of we want to see a candlestick buy signal when stochastics are near the oversold area. A gap up in the overbought area tells us that's exuberance, except if we see a gap up through a logical or identifiable trend or resistance level, that tells us there's a whole new dynamic, that this next new trend is in progress. Again, there's your best friend. We recommended Blackberry not too long ago because there was your kicker type signal. And where did the kicker signal go? Up through this downtrending channel. We're still long on this stock. It just, once again, puts us in the right positions at the right time. UCTT, when it broke out of this little channel with a Doji gap up, there's our scoop pattern. There's about 6 or 8 patterns that you want to learn, because that's what the reason we identify those patterns is because that's what human nature does time after time, and there's strong expected results. Another one that we're in right now, EXAS, Doji gap up through the resistance level. So again, candlestick signals are based upon the most consistent indicator in the world, and that's human emotions. I always tell people prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. So with MetaStock Search capabilities, you can find the 12 major signals and how they're used effectively. So if I'm looking at something like this, and I know that a Doji is telling me to watch to see which way they open it, and they gap it up through this trend channel, I know I'm in a very strong price trend until I start seeing candlestick sell signals. They also search for the patterns. This is what happened on Friday on this one. There's a big Frypan bottom. The definition of a Frypan bottom is that it looks like a Frypan bottom. You couldn't trade this one way or the other, except look where you were right here on Thursday. You're right back at the beginning of this Frypan bottom. We've got 2 techniques that we show, especially in our option trading room. You can be buying calls right here, because what's the prospects of this? Well, if they open a positive, you've got a Frypan bottom breakout, which is usually going to lead to a very strong price move. What's the worst case scenario? They open it lower, fail to go through. You come back out, hopefully with a small loss on your trade. We're in Boston Scientific. Again, there's the Frypan bottom. We were buying right here. This is what we call a trend kicker signal. The kicker signal is your strongest signal. Usually happens at a reversal, but a trend kicker signal is your trend has already started with a left-right combo. Left-right combo is a doji followed by a bullish engulfing signal. One of the things we teach is anytime you see a doji incorporated into a signal, it's usually going to have more compelling results. A trend kicker is, notice how we opened here and closed here, creating that dark candle. The next day they gapped it up and took it up. Now, was that not only a strong signal, but look where it occurred, right where this Frypan bottom started. That told us that we have now a very strong price trend. Amazon, we've been trading this one. There's kind of your piercing signal. And notice where it occurred, right smack dab off the 50-day moving average. Stochastics down toward the oversold area. Kind of your doji sandwich breakout. What did that tell us when they broke out through this trend? That we were going to be in a strong price move until when? Until we saw that here's a bearish left-right combo. It was time to take profits. What type of pattern was it setting up? Well, this was going right into earnings on Thursday. Gapped it up the next day. So now this has another signal. This is what we call the message. They've broken out, gapped it up, profit taking. But what was our message? They gapped it up. That told you people were trying to get in very strong. We know what to look for now. If it opens lower and starts trading lower, you close out the position. If it does a doji, telling you the profit taking's over, the next day we're looking for it to move positive, which tells us we're still in an uptrend. You can use candlestick signals for any trading entity. Candlestick signals are not for trading stocks. You can trade stocks, bonds, currencies, futures, tulip bulbs, anything that has fear and greed in it. We bought June live cattle a couple days ago, right here. No, I'm actually sorry, it was right here. As it came up through the doji, it finished up the limit. The next day it finished up the limit. Friday it closed up $2.55, almost the limit. But you can see what type of pattern we have here. First of all, you've got a big Frypan bottom. Now you've got a J-hook pattern. The J-hook pattern is another one of the patterns that produce high probability trade results. J-hook pattern has a very simple rule. If you see it break out, wave 1 and wave 3 are usually going to be approximately the same, so you can measure what your returns are going to be. There's your best friend signal. This one's up 45% over the last 4 trading days. Here's another one that just did a doji gap up on Friday. We're going to be looking to buy this one on positive trading on Monday. Another one, EEQ, I think it's one of the oil stocks, a doji gap up. Where's our next likely target? Well, if this is wave 1, looking for wave 3 to take you up here. Now, will it get there? Who knows? That's our target. What's our main criteria for owning the stock? There's our Morningstar signal confirmed. How long do we hold it? Until we see a candlestick sell signal. That was probably starting to take profits in here, because what's our worst case scenario? If it comes back, tests the T-line, and starts back up, we can see whether it's doing a J-hook pattern. Remember, prices move in patterns because human nature works the same way time after time. You can do this also on your short positions. There's your bearish engulfing signal, gap down. Puts you in a good short situation. They reverse it, bring it right back up, smack dab to the 50. What do we have up here? A hanging man, a doji, a hanging man bearish engulfing signal in the overbought area. Where's a good place to go short? If they show weakness, confirming the bearish engulfing signal until you start seeing buying. So again, this is not rocket science. This is just using the, yeah, that could be a blue ice failure. So do we always have big price moves? The whole point of investing is trying to find the positions that are going to work successfully. If you see a buy signal and you're buying, what shouldn't it do? If this is the candle that told you the bulls are taking control on that Morningstar signal, it shouldn't close back below the halfway point of this candle, because that tells you shouldn't be in it. You close out the position. For 40 some odd years, I've heard every money manager say, cut your losses short and let your profits run. The only problem is they never tell you how you cut your losses short and let your profits run. Candlestick signals have very simple, common sense applications to tell you when to be in or out of a position. We're looking for these type of signals. We're in con because of the kicker signal. How long do we stay long? Until we see a candlestick sell signal. Now, notice what's happening up here. We've had a gap up in the overbought condition, but we haven't seen selling confirmation yet. Now, there was our bearish harami. If it had opened lower on Friday and started trading down, we would have taken profits, because where was our next likely target? Back to the T-line. The fact that they've continuing it up gives us another indication. It's what we call a 45 degree, that it's probably going to continue in this uptrend. So what we're trying to do is get ourselves into positions. And the reason we show the signals, a lot of people say, well, shoot, this stock's already up 15% today. I don't want to be buying it. The worst investment strategy that you hear most people say is, oh, that's a good signal. I'm going to wait for it to pull back so I can get in. The fallacy of that reasoning is, number one, why would you want to buy a strong signal that tells you the bears are still in control and are selling it off so you could get in? You don't. You want to be buying into strength, confirming the signal. Secondly, what's the rationale for you buying when it pulls back? That you've got the immaculate conception of when to be buying, that as soon as you buy it, it's going to turn right around and head back up. That's a lot of wishful thinking. I would rather be buying on confirmation that that signal is working and being in the right trend at the right time. Again, there's your 3T line, Michael. The further away you move from the T line, the more applicable your 3T line becomes. Again, it's just something that works. Now, a lot of people say, why the 8 exponential moving average? Because it seems to work. If you want to put the 9 simple or the 7 exponential, that's up to you. It's just worked very effectively for us for years. That's the nice thing about candlestick charts, is basically candlestick signals work. If they didn't, we wouldn't be looking at them 400 years after the Japanese traders started using them. So that means anytime you find another indicator that you think should work or improve your probabilities, you can put it on your chart. If it works, keep it there. If it doesn't, take it back off. So again, this is all part of, again, reason Jeff and I have been working so well together for the last few years is the MetaStock Search capabilities are tremendous. As I say, it's to the point where there's probably too much information that you could ever use, but it's there if you need it. Again, the T-line is the 8 exponential moving average. I think that's about all I've got, so I will try to answer as many questions as I can. Yes, you always want to see confirmation of a candlestick signal, and that's very simple. And that's, Jeff is going to be giving you some promotion today, but with that promotion, you get a 30-day free trial to the Candlestick Forum website. Now, on our website, I think we've got about 1,300 pages of information that shows how to use candlestick signals effectively. We've got 2 chat rooms each day. They're open all day long. One's your main chat room, where there's lots of people in there that can identify which stock signals and patterns are working. And it's used so that you can ask questions and learn candlesticks that much faster. And you always have a supply of stocks. Now, I put out 2 or 3 stock picks every day. And we put them out not so that you have stock picks, but we do it in a video format so you can continue to learn why those signals or patterns are working. I always tell people, if you just put out stock picks and you're not learning why they use it, you don't learn anything. It's like the cop that's standing on the street corner and he sees this drunk weaving down the street, and he blows his whistle, pulls the guy over, and as he walks up to the car, there's a penguin sitting in the back seat. And he goes, "What the heck are you doing with a penguin in the back seat?" And the drunk said, "Oh, I found him out on the street, and I don't know what to do with him." And the cop said, "Well, take him to the zoo." The drunk said, "Oh, that's a good idea. I didn't think of that." Well, the next day, the cop's standing there on the street corner, and this drunk comes weaving down the street, blows his whistle, pulls the car over, walks up to the car, and there's a penguin sitting in the back seat. He goes, "What the heck? I thought I told you to take the penguin to the zoo." He goes, "I did. We liked it so much today we're going to a baseball game." So if you don't understand why you're using something, you don't really learn anything from it. So our website, every Monday night and every Thursday night, we go through the charts on what sectors are moving, what futures are moving, such as oil, gold, and usually about once a week, we would do a private training session, not a private training session, a session with members where we do entry and exit strategies, or scanning for the best trades, or how to set your stop losses, or how to take profits. Now, these are all done in video format that you can pick up, but doing it live, you've got the opportunities to be asking questions as we're going through it, so you get a good response, or get good training right there. So for primary scan, yeah, depending on which software you're using, MetaStock, or if you're using things like TradeStation or Thinkorswim for your executions, you can show how to set up those scans. Weather here is gray and cloudy today. Let's see, how do you sign up for the 30 days? Let me scroll back down. If I've missed your question earlier, feel free to put them back in. Oops, I'm already at time, Jeff.
Yeah, it's amazing how fast it goes, right?
That's for sure. All right.
As usual, we're getting a lot of good feedback from you, though.
Okay, good.
People are loving the presentation. Got a few laughs about the joke, so we did miss the Native American joke, though. We did have somebody ask you to tell that joke. I think we'll have to save it for the 30-day trial to the web room. Maybe it's an extra special sneak peek.
Okay, all right, we can do that. An observation that I have made is that when the 10, 20, and 50 SMA converge, there's a probability of a move to the upside. Doug, we're not trading the moving averages. You're going to find out that a lot of times, using the candlestick signals, you're ahead of most other indicators. So the most basic point of candlestick signals is it shows you exactly what's going on in investor sentiment at important technical situations.
I'm going to talk a little bit about the add-on. Is that all right, Steve?
Go right ahead.
Steve, great presentation. Thanks for coming. I really appreciate Steve. He's been great. I have to tell you guys, I show this thing all over the country. I was in Toronto a couple of weeks, and I show his product, and people love it. Had a really, really good testimonial and a good conversation with somebody that was using it. We worked really hard on his product. What we did was we went in and identified, and I have a list of all the patterns that Steve uses in his trading. We went in and kind of created in our software the ability to identify and kind of these patterns in real time. And by having them in the software, it allows you to scan for the patterns. It allows you to get expert commentary in real time. And it's just been a well-received product. In fact, like in stocks and commodities, it's been rated one of the best products, not just for MetaStock, but for all the products that are out there. A very, very good seller. People love it. People buy it. They keep it on the money-back guarantee. We have just a few minutes, so I'm going to show you just a few things of what it can do. Number one, with MetaStock, you do have the ability to go in and create a scan for any of these particular products. So I ran a scan this morning on the power signals. Now, here's all of the 21 different patterns. You can run all of the scans if you want, or you can run some of the scans. I just ran the power signal scan. So what I did is I went in there and looked for any bearish kickers or bearish flutter kickers or bullish flutter kickers, and I fed it into the optionable stocks. Basically said, show us everything in the market that's optionable right now that has any of these patterns in here. The output that MetaStock will give you right here, if you look, there's just a bit of a report. I think it actually came up over on this other screen. Let me move around my GoToWebinar stuff here. And it basically just kind of lists out all the stocks that have one of those kicker patterns. Like, so here, this is bearish kicker. This is bearish flutter kicker, bullish flutter kick. So it kind of lists all of these patterns out. I kind of just randomly pulled up this particular chart that we're looking back down here and applied the template, which actually applies all of the indicators. It applies the T-line. It applies the stochastics for you. But you'll notice right here, it's kind of identifying, labeling all of the patterns. So right back here, we had a left-right bullish combo right at the top. Really good pattern. Here we had a bit of what he calls a cradle pattern. All of those patterns that I showed in that spreadsheet, or in that kind of that sheet right here, all the identified patterns are actually kind of going to be kind of labeled on your chart automatically for you. Okay? And what's more, the reason this came up is because it had a bearish kicker last night, I can come in here and ask, well, what does that mean? And the software actually tell me. So let me show you what I mean. If I click on the view commentary right here, what's going to happen is it's going to actually, there was a bearish kicker and a dumpling top. So if I come over here, it's going to say the bearish kicker presents excellent shorting opportunities. This signal is even more powerful when it forms at a major support level, like a trend line, a moving average, etc. Exit on any trading above the open of the black body of the previous candle. Here's what we specifically were looking for, because a lot of the patterns are kind of a little bit well, you're looking for hooks and cradles and that kind of stuff. So we kind of wanted to tell you what we're looking for so you can kind of identify that on the chart and kind of make sure that it makes sense, right? In addition, because there was two patterns today, it's actually going to tell you about the dumpling top as well. So it's a really, really good product. What it allows you to do is it allows you to identify these trades. Instead of looking at 6,000 charts, you can look at just the ones that have opportunities. And really, that's kind of like what you want to be able to do in the market. Like I said, it's been an extremely extremely popular product. I don't have really time to do it justice today, but it is one of our most popular products. People absolutely love it. I can't tell you the amount of good feedback we get on Steve's work. And it's actually one of the products I actually use in my own trading. So I'd recommend it, of course. It includes those 4 scans, the expert advisor. It includes the layout that's going to apply all of the indicators for you. And it identifies those 20 different patterns for you. And that's really kind of the point of it. The add-on is a one-time cost. People ask, well, how much do you charge for it? You don't charge every month for it. You pay for it one time. If you pay for it, you're going to pay $399. If you pay for it as a result of coming to the summit today, it'll be $299. If you don't have access to MetaStock, I'm going to go all day long. We're going to be talking about MetaStock, but if you don't have access to MetaStock, we will provide it to you. We'll also provide data, and we'll also do a special boot camp to help you get started with MetaStock. So, in addition, if that's not enough for you, we offer everything that we sell here on a 30-day money-back guarantee, all of our one-time products, I should say. So if you have questions, if you want to get some information about this, give us a call. Our phone number, and we do have reps here right now, is 800-882-3040. Santa Massa, good question. Do you have an Indian market? Yes, we get all of our data from Thomson Reuters. So just to kind of show you how ridiculous that looks, they cover about 90% of the global market cap. So when I ran my scan this morning, I used about 4,000 stocks. But we literally have access to the Indian market, we have all of Europe, we have all of Asia, and we have a lot of customers actually in India. We have a very good dealer called Rahul Mohindar who runs Viratech in India. So my phone's gone off. I'm going to turn that down. So in any case, yeah, regardless of where you're trading or what your interest level is, the fact that we're partners with Thomson Reuters allows us to provide you some of the best news, some of the best data, and some of the best data coverage on the planet. So, good question. There's a lot of questions. I'm going to spend a few minutes actually answering these questions. Richard says we should have a Bigalow joke hour. That doesn't sound like a bad idea to me. Let's go ahead and we're going to talk about quite a few of the add-ons today. These are kind of my favorites, actually. And if you want to buy one of them, we're going to give you a $100 discount. If you want to buy a couple of them, we're going to save you $150 on each one of them. Remember, anything you buy too also includes that 2 years of stocks and commodities. So we really appreciate Stocks and Commodities. They've been a great sponsor of us. They help us bring in all these people to the event. And like I said, they've actually been there since the beginning, since the very first summit, since before it was insanely popular. So there's a picture of Stocks and Commodities magazine. One thing that I'd like to mention is for 25 years in a row, we've actually been rated #1 for software in the $200 to $500 price category. And this is something that the readers vote on. So people that get Stocks and Commodities, they get a survey every year, and they can kind of go online and vote for their favorite software. 25 years in a row. #1. It's just crazy. It's amazing. If you just want to try out MetaStock, we offer an extended trial. You can buy 1 month of MetaStock and we'll give you 3, so it gives you plenty of time to actually evaluate the software. And I do see a lot of questions coming in. I'll do my best to kind of answer most of them while we get price started. But you can get that extended trial either by calling us at 800-882-3040, or you can click on this link here, metastock.com/tradersummit 3 for 1. Okay?